Good evening, traders. Time to evaluate our positions again. Today is Friday, December 20th. It's a couple of hours before market closed. Uh, it was very excited week, and I would like to congratulate you. Uh, Finally, you got your baptism by fire, and I think that one real fight, if you survive, teach you much more than year of training and lots of advices, even from very smart people. Uh, let's see what we have, and we will talk what we or you actually have to learn from this week. Uh, First of all, about market. Market is down about 150 points from previous Friday, and it is after 100 points bounce up today. And the most important thing is VIX. It's expanded from approximately 14 to about 20 now, but yesterday it was up to 26 at some point. So huge move down, and of course it was stressful, and our portfolio was under pressure. Why? Because our portfolio has positive delta and of course negative vega. So vega is VIX expansion always against our portfolio. So if we see here, right now it show approximately our S&P futures position about 6,300 in profit, but it's very hard to say from this what's actually real our profit for this week, because lots of positions was closed, some of them with profit, some of them expired like hedges which was in loss, which not showing here, but looks like we are down approximately 2%. So it's approximately maybe $4,500 from last Friday. And yesterday it was down up to 8%. It was huge move down. And we managed it, and we survived. It's good news. And let's see how our positions look like now. Uh, First, we're gonna go and see our A ladder. Well, this is how it's look like, and our closest short at 42 DTE, and right now it's in perfect delta, approximately 11. We did roll, if you remember last week, for uh, virtually we roll all of them except probably one or two. Uh, Now ladder B, it's also in very good shape. Our shorts is at delta at 40 DTE, and also delta after roll down. It's approximately delta 11 shows from OptionNet Explorer. Uh, but guys, OptionNet Explorer not updating, especially day like this, very accurate. So maybe it's different deltas, uh, but in general, this is what we have. Uh, Now see ladder C. Uh, Here's how it's look like, and our shorts at, I believe, 49 days after our roll, and also delta of shorts approximately at 10, perfect spot. And ladder D is Very nice. Uh, it is, by the way, 21 days till expiration, and we was ready to roll it today because in the morning it was our shorts was close to delta 20, our rolling point, but because market bounced up and VIX went down, so right now it's in perfect delta 10, even less. And next week, if nothing happened serious, we're probably gonna uh, roll it out and add probably more hedges. Uh, Now let's see our balalaika trade, which we did roll today and at the beginning of the week also. That's how it looked like. We have short put 42 DTE at delta 8.7 right now. That one which we rolled down today, and the second one at 63 DTE also right now at delta 11. So it's in perfect shape, at least for right now, but we don't know how it's gonna. We witnessed that it's going to be wild when market move down and volatility expand. It can easy go back to uh, delta 20, and we will have to manage it. So, but right now it's in good shape, so I like it how it's look like. By the way, we when we roll them at the beginning of the week and today, we closed our additional vertical hedges which we had. So right now we have two uh, longs, May 16 at delta 9.3, and one more vertical at May 31st. Just one left. We had three of them. So we spent two of them to pay for our rolling. Right now we have one more. And this is how balalaika works. It's pretty good. If during market up, we will continue to add hedges, so we can use it later in situation like this. Also, we have a couple of still violin trades, which is V5, our shorts at 28 DTE, delta 4.5, so I don't think we're gonna have trouble with this. V6 is just has small profit, and our shorts at 42 DTEs, and we have full size delta hedge, which is 500 points wide. And if you remember, we converted our mini violin 2 to regular violin yesterday, I believe. So right now we have at 56 DTE our shorts at delta 10, and we have a full size delta hedge. So we'll see how it's gonna perform. If you remember yesterday, it was in negative territory, approximately minus $1,000. Right now it's just a couple of hundred in loss, so I hope Theta will do the work and we will get in profit soon. We also have our another mini violin, which our short expired, and we roll down our longs and convert it to free delta hedge. That's how it's look like now. so it's not bad to have it. What else do we have? We have oil position, which is in good shape. It's approximately $230 in profit. It's far away from our short, so I hope if nothing happened with oil and it won't drop much below lowest point of last 3 or 4 months range, we will get that tail profit soon. Also, we have TLT position. If you remember, we were assigned 200 shares, which we expected, and actually it was our plan. Unfortunately, OptionNet Explorer is not updating prices correctly for TLT. I don't know why. It shows right now price of 90.4, which real price, let me see how much it is right now. It is 88.5. 88.5. So we still in small profit, approximately $100. Even after big decline of TLT, we still managed to be in profit. Now we have a tent like this above, and we will get dividends and continue to sell options against our long stock position to increase our profitability and reduce risk. If you remember, this week we added 64 DTE, right now it's 63, short calls against our long stocks. Plus we add one more in the money straddle. So also we have, which we opened long time ago, 91 DTE structure, protective structure. So what we're gonna do now, we're gonna sit and wait, enjoy our dividends, and see what TLT gonna do. If it continue to go down, we will reduce our cost because we sell our short calls against it. Plus, we will probably be assigned one more 100 shares, which will cost us approximately $87 if we calculate premium which we get from our straddle. So we will continue to do this. So if TLT will go higher, we will lose our long position with good profit and probably roll up our straddle, just not to be assigned with negative amount of stocks. But if it's gonna go down, we will continue to probably add to our position with reduced cost, reduced by premium of our straddle, and after that we will just sit on that and enjoy dividends. This is the plan. We'll see how it's gonna work. Now let's talk about last week. It was a bunch of questions about my way of trading my personal account, because I have pretty big account, and I already mentioned before, guys, I gave you 3 different strategies, Balalaika, Violin, and Income Ladder, just to learn how it's work. But I mentioned that when you will be comfortable with all of them, probably you'll start doing your trading the same way as I do. So I don't separate that strategies. I run them as a one big strategy of whole my portfolio. So usually I have 2, 3, or even 4 different expirations for naked puts, and I have also 3, 4, even maybe 5 different expirations for my hedges. So, and I run them all together, and if it's time to, if when market going up, it's time to roll when our closest by expiration closest naked puts lose approximately 80% of value, or it's go to delta 3 or less, I start rolling them out to delta 10. First of all, to increase portfolio delta, and second, to use partially that credit and that delta, positive delta, to add or improve my existing hedges. What I mean by improving, so I show you already that it is possible to improve your hedges by closing your shorts if it's cheap enough when it's time, just to hold long puts. It will be more effective when markets start going down. And also it was questions about that hedges. You know that we have three different kind of hedges which we use. It's a long put, vertical spread, and a delta hedge, which is actually a ratio hedge with 2 longs and 3 shorts. So which one to use, when to use them, and how to switch from one kind of hedge to another. First of all, let's talk about them. What's the difference between them? We know that from all these three hedges, the most effective one, it's a long put. But what's the problem with long put? It's the cost. It's very expensive. So it's not very good and wisely to open them. For example, at 150 DTE, delta 10, it will be extremely expensive. So better probably if you run your portfolio the same as I do, as a one big strategy, if it's time to open 150 DTE hedge, better to open it as a vertical hedge, or even better to open it as a delta hedge. It will be much less expensive. So if we, for example, if we buy 2 longs at delta 10 and sell 3 at delta approximately 500 points below, so total our delta hedge will have delta minus 5. And let's say if we roll just 2 naked puts from delta 3 to delta 10, we're gonna get from that roll approximately 14 positive delta. So it's good idea to use at least half of that delta to increase your hedges or improve your existing hedges. So in this case, if our delta hedge 150 DTE has just minus 5 delta and we got 14 positive delta from our roll, it's very easy just to open one 150 DTE delta hedge, and even we have a couple of extra deltas left for improving existing hedges. What I'm do after that, let's say that in 30 days or 50 days after we open our delta hedge at 150 DTE, our shorts went down to delta 2. It's probably good idea when you do next naked put roll, just close 1 or 2 naked puts of that delta hedge, and you will convert it to vertical hedge, or even better, you will have more longs than shorts. This is how I'm improving my hedges. with delta which I got from roll of naked puts. And vice versa, when markets start going down, you do opposite. You just, if you have verticals or even just long puts, you converted long puts to verticals or verticals to delta hedges by selling your longs one by one with huge credit, which you can use to easily roll your naked puts, which is in trouble at delta 20, roll them down. You can roll them down and out, but I usually prefer, if I can, to roll it first, try to roll them first at the same expiration. Why? Because when market bounce up, shorter terms your naked puts, the faster you will be out of trouble. So this is how I approach it. So I roll them out only if it's absolutely necessary and it will be extremely expensive to do it the same expiration, or I don't have enough hedges to cover it. But in regular condition, I try to roll it the same expiration, or at least to add not more than a couple of weeks for rolling. And why we convert our vertical hedge to delta hedge? Because we expecting that sooner or later market will bounce up, and you know that if it's delta hedges during run up, it will lose much less than vertical hedge, or even more you lose from just long puts. So this is why during market down we just not just pay for our rolls of naked puts, but also we converting slowly our hedges to delta hedges back to lose as less as possible during the bounce up. So this is how I do it. And again, what I hope you learn from this week, it's probably two major points. First, it's margin. Margin during this kind of event, the most valuable commodity for us. The worst case, if margin will push you close your positions at worst possible time, you will realize huge losses, which will be very hard to get back. But if your margin is under control and you know that you can roll your problematic short puts down and pay for that with your hedges, we can survive up to 20% market decline. By the way, this trouble which we had this week, it's not because of correction delta loss, but from huge expansion of implied volatility. I hope that it's unusual situation, but unfortunately, I think we're gonna see this kind of events more often now. But good news that IV sooner or later will go down anyway, so it cannot expand for far and long time. Plus, we use Vega hedges, which protect us against huge catastrophic when VIX go above 50. At this point, our Vega hedges should protect us and help us to stay out of trouble, and even probably make good chunk of money if you run your Vega hedges 3 times more longs than your shorts from your income strategies. It's margin, again, the first most important thing which we have to watch. The second most important thing, which I hope you learn, when market is up and going up for a long time, just don't be greedy and spend at least half of credit and delta which you receive from rolling your naked puts to add or improve your hedges. It will save your life. That's it for today, guys. It's another question about IB account. How we can how you can relieve some buying power. Unfortunately, it's not too many options to do it. First of all, it's even more important in IB to close cheap short puts of your hedges. This way you reduce your margin and you can use that margin to add to your income strategy. But yes, IB has probably 2 times higher margin requirement than tested trade. But from my experience, you know that IB during event like this week, they don't expand market requirement same way as tested trade do. So if we keep our margin used for tested trade approximately about 30% in normal market environment, and during market down, that margin, we try to control that margin that it will not go much higher than 50%. In IB situation, because their margin requirement not expanding so much, so you can keep your margin during normal market condition about 50%, and it's fine if it will be expanded to 60-65%, I guess. After that, I will start worry about that. So because of that, it's not actually very big difference between tested rate and IB. It's some, probably if you keep 30% margin for tested rate, it's still gonna be little bit better than 50% use margin of IB, but it won't be 2 times. It's maybe about 30%. But at the same time, it's kind of, especially if you don't have much experience, IB is a little bit better from this point of view because they're not expanding margin requirements so much. That's it. So I cover my way of trading whole my portfolio. I cover my way to deal with and improving my hedges. That's it so far. Thank you very much, guys. Have a good weekend and happy holidays to you and your families. See you next week. Bye bye.